So this is our second closed-door session for this event. It's called the Demystifying Digital Assets for Financial Institutions. So as its name suggests, this is meant to be a knowledge-sharing session. And we have top experts, not only from the industry, but also from the regulatory bodies as well, to help you all navigate through the digital asset ecosystem within Malaysia, but also globally. So we have quite a number of presentations to go through today. So I'm just going to give a quick round of introductions on who is present with us today. So this discussion will revolve around three key topics. The first is an introduction to digital assets. And for this will be conducted by Dr. Stephen Hu. He's the head of digital assets of trade and working capital at Standard Chartered. Dr. Stephen is driving digital asset strategies in cryptocurrencies, tokenized securities, and central bank digital currencies at Standard Chartered. He has led key initiatives like Project Guardian with MAS and Project Dynamo with BIS. Before joining Standard Chartered, he led HSBC's DLT program, developing an award-winning on-chain payment solution. Joining him for this segment as well is Andrew Lilarthapin. Andrew is the head of business product at Maybank Securities Singapore, with over 2 decades of experience in traditional finance, digital assets, and cryptocurrencies. He previously led Bitstamp's Asia-Pacific expansion and has held senior roles in top firms like JP Morgan and Saxo Bank. Andrew is a recognized thought leader in digital finance, frequently speaking at industry events and contributing to key publications. And for the second segment, it's on local digital asset ecosystem in Malaysia. And we have 2 of our local players coming in to speak on this topic. We have Aaron Tang, the APAC General Manager of Luno, digital asset exchange. Aaron oversees business operations across the region and helps drive cryptocurrency adoption. He played a pivotal role in launching Luno as Malaysia's first licensed digital asset exchange in 2019. And following Aaron is Han Lu. Han is the founder and CEO of Halogen Capital, Malaysia's first licensed digital asset fund manager. He previously founded Ringgit Plus, Malaysia's leading financial comparison platform, growing it to a large customer base before stepping back in 2022. Han has also launched innovative digital asset products, including the world's first Sharia-compliant cryptocurrency mutual fund. And in our last segment is on Malaysia's regulatory landscape on digital assets. Joining us today to speak on this are representatives from BNM and the SC. We have Kaiser Anwaruddin, Director of Payment Policy at BNM. Kaiser oversees the regulatory framework for payments and digital currencies. He leads BNM's Digital Currency Research Hub and has been involved in global projects like Project Dunbar and Project Nexus. Kaiser has been with BNM since 1999, working extensively on financial surveillance and stability. And last but not least, we have Lee Chi, Head of Digital Innovation at the SC, driving policy and development initiatives aimed at fostering innovation in the Malaysian capital market, focusing on cutting-edge innovations such as digital assets, blockchain, and AI. Her team runs innovation engagement programs and innovation facilitation hub, dedicating to incubating and facilitating the entry of new businesses models into the market. So after all these 6 presentations, we will have a Q&A session after. We'll be using Slido, so a QR code will pop up, and if you have any questions, you have to scan the QR, and then you have to use the app to fill in the questions. So we have a good number of presentations to go through, so let's start. I'm happy to invite Dr. Stephen Hu to start us off.
Thank you so much for the introduction. I'm Stephen Hu. I'm responsible for the digital asset business for trade and working capital at the Standard Chartered. It's my pleasure to be here and share with you some of our latest thinking in the digital asset. Many years ago, when I just started my banking career, I understood that at most fundamental level, a bank does actually 4 things. We lend money, move money, grow money, and research money. But the things are started to change now, most recently, with the adoption of the digital asset and the blockchain technology. And the younger generation of the corporates, the consumers started to look into the new ways to have access to the financial services that is much smarter, more inclusive and much faster, and also new asset class to grow their portfolio and grow their wealth. And we have started to see actually the growing trend of the digitalization that is entering into this digital finance. So if you look at that, latest industry reports has already indicated that the overall demand for token assets could reach up to $30.1 trillion by 2034. And the tokenization world is just starting taking off. And this represents a paradigm shift about banks and non-bank financial institutions for us to actually to change the way that we grow money and move the money for future. Right? So if this also provides an opportunity for us as a community to think about our business models and how we interact with our customers and streamline our processes. For example, one of the top or biggest stablecoin company that has a market capitalization of more than $100 billion US dollars, but the business is run by less than 100 full-time employees. But if you in comparison, right, as a global bank, as a similar market capitalization, we roughly have around 200,000 full-time employees to keep the light on. This is such a big contrast. So this is actually the opportunity for us to look at this digital finance opportunity. These are all the makers and the drivers for change. So to start over today, I will probably just start with actually the basic categories of the digital assets. Then we can actually look into what are the ways that we can grow the community, and we can actually start to being present, but also seize the opportunity for the digital finance. So largely speaking, there are three different categories of digital assets. That's as banks and NBFIs we keep talking about. I think the first one is a cryptocurrency, Bitcoin, Ethereum, and there are thousands of new coins being minted on a daily basis. But the market cap is about over $1 trillion US dollars at this moment. There's a central bank digital currency, which actually makes the payment much more streamlined, efficient. The key characteristic about CBDC as compared to crypto asset is it is issued by the central bank. And it can be used for cross-border payment, but also domestic payment. Some of the classic example is the digital yuan in China, which operate on the base two-tier structure, where the commercial bank have a role to play to perform the KYC, the AML, and then actually facilitate the settlement between bank to bank. And if you go to China today, you download the app, you will be able to pay for your goods and services using a purely digital money. And these money are not held on your balance sheet, basically considered as cash. The third one is also very interesting. It is about tokenization of the asset, security tokens, which actually look into the ways that how the capital market product for some of the bonds, but also includes, I think we have talked about trade finance asset, short-term lending asset. So those assets, some of them actually have not been historical, very liquid, and they've been tokenized and being distributed and fractionalized to those investors that can have access to them, and for a broader opportunity to have a financial inclusion, but also the new ways for them to grow the wealth. So in generally, that's a globally basis. These are typical three different categories that we have looked at. And if you look at number three, which is asset tokenization, if you look at the key concept here, they actually have a long time back history where we started looking at the ETF and the REITs. And then with the blockchain technology and the adoption of the increasing adoption of digital asset, actually it is being multiple regulators have started looking into this field. Hong Kong, for example, Singapore, Dubai are all evolving their financial infrastructure to cater for, to support the asset tokenization or tokenization of the financial assets. What are the benefits of tokenized financial asset? There's a number of things, right? So I think, firstly, it leverages on the smart contract technology, make the process much more streamlined, and then enables improved efficiency and automation level, which has been historically been less efficient in the market now, and improve the traceability and the verifiability due to the data provenance that is an intrinsic characteristic of the blockchain technology. It allows for inclusive access to the financial asset by fractionalizing the asset, but most importantly, we started to see how tokenization allows for decomposition of the risk, providing more customized solution, and in a digital economy. And some of the examples that we have seen is a Standard Chartered experience in Project Guardian. We call it asset-backed security token for underlying trade and working capital loans. So the trade finance is actually the backbone of the real economy. So it is projected to be a $36 trillion by 2030, according to Standard Chartered research. And it's often this type of assets is being considered as a low-risk investment. It has a low correlation to the stock and bond market, as widely being used as a diversification asset class. But it is actually only within the bank and insurance company that is not actually very accessible for the general public. So what we are trying to do here is actually to make trade finance as a new asset class to everyone, and through the use of tokenization technology. And if you look at the structure, there are essentially 4 steps here. So the first step is about having a legal outright sale of the asset, so the special purpose vehicle. Then you tokenize every individual loans that you granted to the import-exporters, and that become a non-fungible tokens. And then we pull those assets together into the pool and use the trenching technology, which is at the core of a traditional securitization, but doing on the blockchain system, where smart contract automated entire cash flow waterfall. So a number of the intermediaries has been eliminated. For example, the paying agent, the calculation agent, and the use of technology also provide a look-through feature where the investor, they will be able to see what they are buying, and we can explain to them what they have bought. And after an exercise called initial token offering, the investor, they will submit, they will subscribe to this token, where we transit the different token, they will be allocated accordingly. So last year, end of last year, Standard Chartered have conducted the pilot of $500 million US dollar issuance with the 2 tranches of token. The token has been listed on the Singapore Exchange under the digital bond regime, sandbox regime. And it has been allocated to 7 institutional investors within a very short 6 days of a subscription period. And I look back, when I started the blockchain career in 2020, where we issued Asia's first digital bond, I talked to more than 50 investors, and very hard to get a deal. But this is such a contract. It shows that the industry is moving at a pace, and it shows that the investor is looking for allocating to digital asset class that can give them the return and give them the efficiency that they want. And that is just one example. So another example Standard Chartered have done is actually with the Bank for International Settlement and Hong Kong MA, where we have leveraged the tokenization using a new concept called digital trade token, where the payables from the anchor buyer in the supply chain has been cascaded and sent down to the deep tier suppliers. So with this tokenization technology, the credit standing of the buyer, which is actually often very strong, can be passed down to the deep tier of the suppliers, which is actually most of them as SMEs. And as a result, the deep tier financiers, they will be able to get financing much more easier. The deep tier suppliers get finances much easier. And then the bank actually help to elevate the SME participation, and this contributes to mitigate the $2.5 trillion trade finance gap globally at this moment. At a time where this trade gap is still widening, so digital solutions and tokenization can play a role to potentially help to mitigate this gap further. So where are we heading now? So we started to see actually there's an increasingly mature ecosystem of tokenization, where there's a more and more collaboration between the financial players as well as a public and private partnership to overcome the siloed and duplicated effort that we have seen for the past 5 years. At the same time, we started to see a more democratized ownership and access to the asset class. And that is become more available in a more digital native format that they are familiar with, and then getting the user experience they have not gotten before. And there are many platforms out there, so interoperability will be the key, right? So we recognize the immediate need to have an interoperable platform that is both public but also permissioned, where the bank can play a key role to ensure the underlying asset is safeguarded and is real, and the real-time connection between the real world to the blockchain ecosystem. And that is a role I think the bank will continue to play to get back to the four key roles of the bank that we have, which is continue to lend money, move money, grow money, research money in the digital way. Thank you.
Thank you, Dr. Stephen. I'd now like to invite Andrew to give his presentation.
Thank you. Okay, so for my 10 minutes today, I was asked to talk about use cases for digital assets in capital markets. So I've made it quite rudimentary. I've got 6 use cases which I will touch upon. At any point in time, if there's any sort of desire for there to be further detail, you'll be able to find me after today. But just want to thank the SC first for inviting me to speak today. My background was kind of spoken on before, but I guess having spent 20 years in traditional finance and then moving across and doing 6-7 years in crypto specifically, and now coming back to look to try and bring those two worlds together. I've been able to see it from both sides. So I'm based in Singapore for Maybank Securities, and just let's get straight into into these various use cases. So next slide. So let's begin with tokenization, specifically of real-world assets, which is something that in the various discussions that we've had today, there's been a lot of talk about, right? And I think in terms of the use cases and where the benefits lies, I think it's been pretty clear. So on a theoretical level, there's a lot of advantages to tokenization. I guess by tokenizing, real world assets, real estate, commodities, private equity, what it does is it allows us to convert illiquid assets into digital assets, which can then be traded on blockchain platforms. What that does is that, it creates liquidity for assets that were probably once hard to trade, and it enables fractional ownership. So it makes high value assets accessible to a broader range of investors than it ever was before. So there are some examples in Southeast Asia of various firms pioneering tokenization. And that gives investors the opportunity to own fractions of, say, commercial properties that were once reserved for larger institutions. Okay, so across to on-chain collateralization and lending. So by using decentralized platforms, financial institutions can use their digital assets as collateral and then gain instant access to global liquidity pools. So that allows them to act as if they were tapping on a global bank of capital on demand. This is a huge leap, especially in this region where traditionally cross-border lending can be costly and time-consuming. In Singapore, we have a firm which now offers collateral-backed lending through tokenized assets in partnership with DeFi platforms. So this allows faster and cheaper access to liquidity. It disrupts the traditional borrowing models and enhancing the flow of capital across borders. So on-chain collateralization, it allows institutions to tap into global liquidity pools more efficiently. It automates the lending process with smart contracts. Institutions can significantly reduce costs, eliminate intermediaries, and cut down on settlement times. So it's a much faster route to accessing capital. Let's move across to programmable finance. So through smart contracts, digital contracts can automatically enforce financial agreements. So loans, trade settlements, And this is without any sort of manual intervention. DBS in Singapore is using smart contracts to streamline bond settlements, cutting settlement times from days to just hours. And so I guess in capital markets where speed and efficiency, they're not just advantages, they're necessities, this is very much a game changer. So DeFi, which stands for decentralized finance, opens up that peer-to-peer, so P2P financial services. So lending, borrowing, and trading without relying on intermediaries. So drastically reduces costs, it provides a direct market access to global liquidity, particularly important in our region where financial services are still developing in many parts of the region. We're seeing increased interest in DeFi lending platforms that allow local businesses to access capital in innovative ways. So institutional DeFi is the next frontier. So it allows large capital to seamlessly interact with decentralized platforms. Projects such as Aave Arc are leading the charge. So essentially it's the same as that Aave platform, but they whitelist regulated entities onto the platform. So that creates like that sort of lending and borrowing opportunity for institutional players. So back on that. So what that does is that that cuts out the need for intermediaries, and so that significantly costs savings there. Also, there's that transparency as all transactions on the blockchain are recorded, and then it gives access to new markets, especially in regions where traditional banking may be less established. So cross-border payments have always been a pain point for financial institutions, generally involving sort of like high fees and longer processing times. Digital assets allow real-time, low-cost international transactions, particularly relevant for Southeast Asia, where cross-border trade is booming. A couple of guys, Ripple's on-demand liquidity platform is something that a lot of the banks are working in the region. These reduce costs, these reduce settlement times. These platforms transform the way we think about international payments. And similarly, JP Morgan doing the same with Coin on the Onyx platform. Cross-border payments powered by digital assets provide cost efficiency. They eliminate intermediaries like correspondent banks. It ensures a faster settlement time. It improves cash flow. It enables institutions to engage more effectively in global markets. And then for the last sort of use case, and a critical component of any financial institution is security and finance. And digital assets play a major role in enhancing both. So blockchain technology now allows for real-time auditing and compliance. I believe Project Guardian in Singapore has been at the forefront of looking to integrate this real-time auditing for blockchain transactions. So that ensures that financial institutions can meet their regulatory requirements without the need for time-consuming audits and checks. Blockchain's sort of transparent and immutable nature means that reduces the client compliance costs, and it builds trust between institutions, as it's that tamper-proof nature of the blockchain reduces that fraud ability. So that also means it's the highest level of security. So in conclusion, I've run rudimentary through 6 various use cases. There are countless use cases that innovative people and firms are coming up with on a day-to-day basis. But essentially, digital assets are reshaping capital markets. From tokenization to programmable finance, these technologies are opening up opportunities for efficiency, for liquidity, but then also for growth, as we've seen. So I'm excited to see how we continue to push these boundaries and what the potential is to unlock digital assets, particularly in the region. So thank you for your time.
Thank you. Thank you, Andrew, and also to Dr. Stephen for giving us a very comprehensive introduction to digital assets. So we'll move on to our next topic now, which is on the local Malaysian ecosystem of digital assets. And to start us off on that topic, I'll have Aaron on the stage.
Thank you. Hi, everyone. My name is Aaron. I am the General Manager for Luno in Asia Pacific. So it's a very exciting topic for me because I've been involved in digital assets, cryptocurrency since 2016. And in about 7 minutes, I'm going to quickly go through two topics. Number one is the general landscape of the digital asset ecosystem in Malaysia, first topic. And then second topic, I'm going to cover a little bit on the regulatory implications of platforms like ours. So I'll share a little bit about Luno and how we do our regulatory compliance, and hopefully this will be useful for you. So if you can go next. Right, so in Malaysia, we have 14 regulated digital asset players. Can you believe it? 14 now. Now, these may not necessarily be institutions that invest or provide services only in digital assets, but they are platforms that allow some form of services for digital assets. Now, we have 19 digital assets approved by the SC for trading. So this includes very well-known names like Bitcoin and Ethereum, but also some of the newer tokens as well. Now, if we go next, and if you look at the milestones of how Malaysia's digital asset ecosystem has grown over the years, it's actually very, very exciting. So if you go right to the left, 2019 was when platforms like Luno, MX, Tokenize, these were the first batch of digital asset exchanges that came into the market. So 2019, and then very, very exciting, in a couple of years after that, we launched Malaysia launched the initial exchange offering platforms. So these are platforms that allow a form of fundraising using tokens. It's pretty similar to equity crowdfunding, but instead of equity, you use tokens. And then shortly after that, digital asset fund managers started showing up, or rather fund managers that offer people the ability to invest into digital assets. So we'll hear from Han from Halogen shortly. They were the first ones, but we already have a couple in the market. And then fast forward to November 2023, we started seeing digital asset custodians. So platforms that allow people to store their digital assets. So you can see the evolution of how it has happened over the years. And since 2019, when it first started, it's already been 5 years where actually Malaysia has been actively under the SE regulating digital assets. So if we move on, I'm going to cover very, very briefly the regulatory environment for digital asset exchanges like ours. So you see Luno in the center. This is sort of sharing how Luno does it. And if you see right at the top, SE are our regulators, right? So SE, they'll issue the guidelines, follow the arrow on the left. They'll issue the guidelines that we have to follow, for example, prevention of money laundering and terrorism financing in the capital markets. And then we also have guidelines preventing proliferation financing. And then also some more general guidelines, for example, cyber risk, advertising, and so on. So these are actually some very, I would say, common guidelines that all the other capital market intermediaries also follow. So whether that is, I think, fund managers and so on, we actually share some of the guidelines as well. Now, if we go back, if we comply with these regulations, that will allow us to work together with an independent trustee, which allows our customers to store their Malaysian ringgit. So this independent trustee will store Malaysian ringgit, and that will allow us to facilitate the trading of digital assets, such as Bitcoin, Ethereum, and so on. So now we also have reporting obligations, if you follow this arrow here, to Bank Negara, right? So Bank Negara, we have reporting obligations. For example, right on the left, submission of STRs. If there are anything suspicious, we have to report. And then we also have to comply with foreign exchange policy. So basically, depending on the amount of loans you have, you may or may not be able to send digital assets out of the country. So this is a very, very broad overview of how Luno operates in the regulatory environment. And moving on to the final topic, we'll talk a little bit about transaction monitoring and also the suspicious transaction reporting process. So if we go from left to right again, as we know, transaction monitoring is very important to make sure that our platform is not being used for wrong purposes. So right at the left-hand side, transaction monitoring scenarios, they are always changing, right? The market is changing, new threats emerge. We have to ensure that there is regular monitoring and updating of policies. So what happens if something is detected? Something is wrong. We'll move to the second part, which is we will have to review and escalate internally, and we will go back to the guidelines provided by the SC on money laundering and terrorism financing. What are things that we look at? Okay, a couple of things. So first of all, economic background and pattern of the transactions. Secondly, factors to form suspicion. For example, the nature of the transactions, the profile of the person doing the transactions, the behavior of that person, and depending on what actually happens there, we either form reasonable grounds for suspicion or we justify if there's no suspicion. Now, if there is suspicion, it goes to an STR process. I think many of you will be familiar with this STR process. We report it to the FINS portal or Bank Negara, reported by the country compliance officer. And I just want to stress that this is actually an independent process. So the country compliance officers, they have sole discretion on what is considered suspicious. So individuals like myself, we are in management, we actually don't get to tell the compliance folks, like, do you report this or not report this? The compliance officers actually report directly to the head of compliance globally, and the global head of compliance reports to the board of directors. So there is the level of independence and I would say governance there. And lastly, as we know, there has to be ongoing guidance, training, and reporting. So we do make sure that our teams are adequately trained and always have awareness on the latest regarding transaction monitoring. And yeah, finally, we do make sure that there's regular reporting to the boards as well. So that wraps up my really, really quick presentation on two topics. The first is the regulatory environment, or how we do it. The earlier one was the overall landscape of crypto in Malaysia, how it's evolved. But I would love to speak to any of you if you have further deeper questions. I'm going to be here after the session, so look forward to chatting with you all. Thank you.
Thank you. Thank you, Aaron. To continue on this segment, I'd like to invite Han onto the stage.
Hi, afternoon, everyone. Sorry, I know I'm fourth on the list, and hopefully we can go quickly. I got 7 minutes as well. And then we get the questions, right? It's more interactive. I'll be going through how Halogen, as a licensed fund manager in Malaysia, is doing exactly what the topic is saying, which is demystifying digital assets for institutions, as well as a little on what we're doing on the other side of the equation, which is tokenization, which Dr. Stephen mentioned. So who is Halogen? We are Malaysia's first licensed digital asset fund manager. We were established a year and a half ago, early 23. And since then, we've been trying to bring digital asset investing, not necessarily trading, so investing. We have Aaron and the exchanges for the trading part. But for actually getting exposure, making investments, balancing your portfolio, that's what we do, right? We're a fund manager just like any other. We're licensed here in Malaysia as a fund manager. You won't find us on the list of digital asset players. We're not a digital asset player per se. We're a fund manager who just so happens to have digital asset exposure. And in the last year and a half, we've been able to bring many institutional clients with over 1,000 right now, not all institutional, but mostly institutional, to the digital asset investing world. And in that 1 year, they have about 100 million with us through 5 public wholesale funds, which are launched. You can see it on the public register and the SC's website, as well as some private strategies, which some private institutional investors may want to hold digital assets and manage them in their own way outside of the public funds infrastructure. So I'm going to go through, sorry, next slide, please. Thanks. And it's not just, the products that we do, right? As a fund manager, we pretty much comply with what you expect from a licensed fund manager in Malaysia, which means, making sure there's a fund auditor, a tax advisor. For share compliance funds, we have a share advisor. And the point of me showing all this is to say that, look, like, it's not some special regime that we're under, right? We're pretty much under the same regime as any fund manager here in Malaysia. And we feel it's very important to have top-tier service providers for not just ourselves, but the funds, right? To give institutional confidence, right? When you see the likes of Ernst & Young being the fund auditor, the likes of PwC being the fund tax advisor, you can be sure that, look, like, these guys are monitoring funds, fund activities, and not just audits, right? But increasing trust, not just in the products themselves, but around who's looking after those products. And who's invested in intelligent institutional companies, not just it's not just individually owned. So the likes of 500, Pajana, and by association Khazanah as well, right? And so a little on this space, right? Putting digital assets into a fund wrapper, and then bringing it out to market. And there's been several developments in the last few years. Notable for Malaysia, we've actually been able to access ETFs from Malaysia licensed securities exchanges, right? The first ones were the futures ETFs in 2021. We obviously launched in Malaysia in 2023. Ours are mutual fund structure, not an ETF structure. So we were the first Shara compliant, I think, in the world, mutual fund with crypto inside. And then earlier this year, the 10, now 11, 12 spot ETFs for cryptocurrency, specifically Bitcoin and subsequently Ethereum in the US. So these are quite notable milestones for this kind of structure, right? So it's not exactly super new. It's been around for a few years already. And I just wanted to point out that, it's been very well received. So this is a slide around how they traded the 10 US spot ETFs traded in January this year. I think almost 5 billion trades in one trading day. Huge, right? Huge. I think it broke many records. And these ETFs are climbing very, very high up the list in terms of trading volumes and assets under management, most importantly for us as asset managers. We look after assets under management. I think today it's about 60 billion US dollars in assets under management. I think it accounts for somewhere between 5 to 8% of all Bitcoins in existence, right, in a trust structure. So clearly, this is a effective way, a compliant way, effective way to get this market exposure to an investor, be it retail or institutional. Then the next question is in the next slide, I guess, is why has this been received so well, right? Why do people like it, right? I think for us, we look at why would people choose us to do their investing. Right, we break it down into three parts, right? Why does a mutual fund structure matter, right? Well, on the one side, it's fairly trusted. Well, most trusted, I would say here. A fully licensed entity means we can comply with pretty much everything the SC and Bank Negara throw at us as a fully licensed fund manager. So that's kind of a big protection for investors, be it individual or institutional. But number two, I think equally importantly, in the word trust, as you know, the word unit trust here in Malaysia is quite ubiquitous and interchangeable with mutual fund. The word unit trust indicates that there's a trust structure present, right? And what that means is a bankruptcy remote structure where investor funds are held by a trustee, not by us, including the digital assets. So anything happens to me, I can disappear tomorrow. You just call up the trustee and say, hey, look, you have my assets. Trustee goes, we have a trustee sitting there. Trustee will go, yep, I have your assets. Number two, convenience is a factor. Many investors like trading on exchanges. We actively encourage them to if they want to trade themselves. But there are a big section of investors, be it individual, institutional, who don't like to self-trade, who maybe don't find it appropriate to do it themselves. Maybe they have a specific investment mandate that they can't do it themselves. And you can access, passive, active strategies through a fund manager. That's why the industry exists. And then we can have portfolios which can be rebalanced on your behalf. That's what fund managers do. And last kind of pillar there is a compliance pillar. And what do I mean by compliance, right? There's been a lot of confusion historically on digital assets, right? How do I value them, right? How are they audited? How do I get my auditor to understand them? How do I ensure that my taxes are done properly with this in mind, where my valuation's done? So it's important to bring bring digital assets into the space that people already know, which is a highly compliant structure, compliant with, in Malaysia, MFRS standards, and I guess by Association, IFRS, and Sharia compliance as well. How do I ensure that not just the asset is Sharia compliance, but the way I invest in an asset is Sharia compliant? So we have Tan Sri Dr. Dawood's company, Amani, look at those funds, look at the structures that we put, how we trade, where we hold the funds. Is there any leverage? Is there any garar, riba, masir? And ensure that, look, if we have a Sharia compliant fund, which all our funds are Sharia compliant, they are indeed Sharia compliant. So that's the kind of thing that an institutional demands, right? Not necessarily a specific way or another. They just demand clarity, and that's what a fund structure can provide. And that's what we do, right? And one of the ways that we are bringing this wrapper, or right, this way of investing to the market is, if it's through a unit trust, it can be marketed by unit trust advisors, right? So we have a very, very robust and lively industry for unit trust advisory and distribution here in Malaysia. Being a unit trust, just register with FIMM, our Federation of Unit Trust Fund Managers and Advisors, and then they can be easily distributed as with any other unit trust, be it equity, bond, and now digital assets. So that's one of the ways that we are doing to just demystify things. It's not some special in the cloud asset, right? You can own it. You can own it in a structure which you are familiar with, and you can distribute it in a structure that you're already familiar with. So that's the kind of thing that we're trying to bring to the market. And these are our funds. I don't need to go through too much of our products. This is a bit of a shilling exercise, I guess. But we have, we have complete full digital asset funds. We have partial funds. We have mixed funds. So we have hybrid funds like the Sharia Ringgit Fund, Sharia Enhanced Income Fund, which is a mix of crypto and digital assets and fixed income, for example. So any kinds of things can be done within the fund mandates that are set, right, and approved. So that's the kind of thing that we do. I wanted to add one last bit around what digital assets can do for our industry as well, right? Which is in the next slide, which it was touched on by the first two speakers around tokenization, right? So I've been talking for like 6 minutes on going from kind of the traditional investing world into digital assets. This is what we're doing on the other side to bring the digital asset world to traditional assets. So one of the ways you can do it is through a unit trust structure, right? What I mean by that is, we talked about the word trust in unit trust a lot just now. Let's talk about the word unit in the word unit trust. The word unit in the unit trust is quite, what's the word to use? I want to say. You can interchangeably use the word unit and token. Why? Because it kind of means the same thing. It's fractionalizing an investment, right? It just so happens that units are typically on a trustee's, I want to say Excel sheet. No, a portfolio management system, right? A trustee's portfolio management monitoring system. You can see how many units each investor has, right? How is that different from seeing it on a distributed ledger? There's really no difference whether you call it a unit or a token. And that's exactly what we're doing with unit trust funds. You can call it token trust funds if you want, but ultimately it's tokenizing unit trust funds, putting the units not on a SQL or a trustee's Excel sheet, but putting it on chain, right? And then it still represents the same ownership in the trust fund that an investor has. It just so happens to be in a decentralized ledger, right? That's what we're doing for funds. There are a couple of other players. The pitching guys are doing it for equity-like projects. So and KLDX just the second IU operator just did it for a fixed income-like instrument. We're doing it for a fund industry. We think a fund is perfect to do it because the word unit already means it can be done today, and we're already doing it today. So that's the kind of thing I wanted to share about what we're doing here in Malaysia and what we hope to bring to the market. Thank you.
Yeah, thank you so much, Han. So we'll move on to our next segment now on the regulatory landscape of digital assets within Malaysia. To start us off on this, I'm happy to invite Lychee from the SC.
So I won't bore you about regulation, but I would rather share you our thinking and approach how we think about regulating digital assets in capital markets, what we are doing now, and also what we plan to do next, so that you know where we are heading to. So this one is a massive slide, but the key message is regulators around the world have been cracking the head about how to regulate this new asset class called crypto assets. So around 2018, before I even started this career, people have been thinking about how to regulate it. Different jurisdictions are taking different approach. Like in Singapore, they call it a payment tokens. In some countries, they call it commodities. And some, they have a new category called virtual assets. And in Malaysia, later I'll explain to you later, we are regulating them as a securities. But that, during that time, creating a lot of challenges for digital asset exchange players because they have to follow different regulations when they go to different countries. But during that time, I think there's no streamline of regulation, but most of them follow the so-called AML or anti-money laundering regulations set by FATF. And then backward, I think when this asset class become more and more mainstream, I think regulators around the world started to think that, hey, we need to have a more standardized approach. And as part of the working group, we're also working group in the so-called IOSCO. It's a body of all the capital market regulators get together and think how about a policy approach towards regulating this asset class. So we realized that there are certain activities, for example, issuance, trading, are something that securities regulators are very, very familiar with. And they're also the key activities of all these crypto assets. So there's a paper published in 2022 or by the IOSCO, and the key principle is same activity, same risk, same regulation. So be it we call it payment token, be it call it securities, as long as they are traded, the trading principles should apply. So key principle like customer asset segregation should apply. So that's why there's requirements to follow so-called IOSCO principles. And for banking side, I think like FSP also have like high-level guidance on crypto assets as well. So we have finished a paper. So next step for our work in IOSCO is like how to implement this principle. So this is something that we also will start actively engaging our players to work on that. So about our journey in Malaysia. So in fact, we're one of the jurisdictions that set up a clear approach on crypto assets. So we set up something called prescription order, that where we scope in all the securities related digital assets as securities and apply regulations on that so that we provide clarity for our market players who would like to do this business. So our thinking that time is we cannot stop investors who want to invest, but we want to provide them a safe space where we can regulate them. If they want to invest, we want them to be able to invest safely, and for us also taken a so-called responsible innovation approach towards this new asset class. And this thing is evolving. I think currently we are reviewing our prescription order on security tokens so that we can also keep on track on the global development of the digital asset as well. Next slide. So another key characteristics of Malaysia is we work very well between Bank Negara Malaysia and Security Commission. This is also where we provide the so-called market clarity to all markets. So for all the digital asset being used as payment, you should always refer to our peer regulator, Bank Negara. But if it's related to market capital-like activities such as issuance, trading and custody is under the purview of Securities Commission Malaysia. But there are certain things, for example, the foreign exchange policy, where Bank Negara is looking at, but also like Aaron mentioned earlier, the DEX also need to pay attention to that. That's also aligned with our other securities activities. So the SU will facilitate, but they should also always follow the FEP rules of Bank Negara. And we will also work closely in many aspects. For example, the money laundering, tariff financing related risk. SU ensure our institution follow that, but we work closely with Bank Negara to conduct the necessary intelligence review. And we also have very frequent updates between each other so that we kind of identify potential systemic risks related to this asset class as well. So next is just a high level about how SC regulate that. So the reason we prescribe this security is bring that under our purview. Otherwise, it will create a lot of uncertainty in the market. Once we prescribe them as securities, we can apply the so-called security laws on that. But we also understand that crypto assets, for example, the so-called cryptocurrencies and utility tokens, they are different assets. They are not the same as securities. So we kind of created the bespoke framework for their issuance and trading activities. But we also pay attention to the so-called security tokens. So for security tokens, we are taking the so-called tech-agnostic approach. So if you are equity, you tokenize, you are still equities. If you are fund, like Hans said, even if you're tokenized, you should follow the fund regulation. But we also want to pay attention to perhaps additional technology risk related to this tokenization. That is where we will have conversation with our players. If they want to tokenize, they have to talk to us first. So there is kind of together identify potential risks that that we should address. But later on, I'll talk about what we'll do next on that. So we have very comprehensive framework on token issuance, trading, and custody. That's where you can also check our guidelines on recognized markets and guidelines on digital assets. But another thing is something that Han always said, since the SC regulate digital assets as securities, so we also allow our intermediaries to deal with digital assets. So if you are fund managers, you are able to invest in equity or bond. Of course, you can also invest in digital assets, but follow the underlying regulation. For example, our unit trust funds targeting retail can only invest 15%, up to 15% to alternative assets. So similar case will apply to our digital assets. So this provides also clarity of our players who want to deal with this new asset class. But we also discuss work together with Halogen at the beginning when they first launched, because there are also some digital asset specific risk, such as digital asset sourcing and custody. So we work very closely together, all the ecosystem, to ensure that we have an arrangement that is most comfortable with everybody. So what we want to do next? So these are two key things that we would like to do next. The first one is so-called addressing institutional digital asset needs. Because I think for people who are in digital asset market in Malaysia will know that our market is still quite retail-centric, but we also look at the global trend where Han has mentioned earlier. We've seen quite a lot of institutional adoption of digital asset, not only crypto assets, but also security tokens. So to be able to address that, we would like to develop an ecosystem that can offer services that suit the needs of institutional investors, which includes so-called institutional grade custody, trustee solutions, and so on. And the next one is we want to work towards enabling tokenization within the capital markets. So this is where we would like to not only our IEO players, but we want to allow our existing intermediaries to be able to tokenize. So we also want to explore more use cases. I think this morning in our fireside chat session between Assistant Governor Suhaimi Ali and also Dr. Wong, we talk about importance of having some market utility that can drive the digital market. So we want to see, is there any interesting blockchain use cases in capital market? For example, digital identity that we can provide convenience to our investors in capital market as well. We also welcome anyone who have interesting idea to come to talk to our team. So I want to introduce my team. So they are here, Alex, Katrina, and Dina. So if you have any interesting idea on tokenization or blockchain utility projects, feel free to approach any of us. And that's how we do our, so I think what we'll do next is we'll continue to engage our ecosystem for our policy making. Industry engagement, I think SC by SC is also one platform for us to talk to everybody. And we also have a platform called Affinity. If you're a new business model that doesn't fit into current regulatory framework, I think our chairman also launched a sandbox today. Feel free to come to talk to us. And last but not least, we also actively participate in international policy discussion on IOSCO. So currently, we are also in the so-called tokenization working group, so that we can also learn about best practices around the world on how they facilitate tokenization in capital market. Thank you.
Thank you, Lichi, and thank you for the shout out. To close us off for the presentation part, I'm happy to invite Kaiser from BNM to talk about regulations within digital assets in the banking sector.
Thank you, Katrina. So I think first, thank you to SC for inviting Bank Negara to participate in the session today. I think we're happy to share some of the perspectives perspectives of Bank Negara's focus and priorities over the next couple of years in this space, and it ties nicely with some of the things that have already been mentioned over the past hour. I guess it goes without saying that digitalization is profoundly shaping the dynamics of the economy. To this end, I think one of the strategic thrusts of the BNM Financial Sector Blueprint 2022 to 2026 has been the advancing of our digitalization in the financial sector, and this is meant to continue to support the needs of the economy. I think one of the success stories that we've seen has been the proliferation of e-payment adoption in the country, including amongst the MSMEs. And I think for many of us, I think there are times where we don't carry cash at all to facilitate our payments. I think part of the work in advancing digitalization has also included exploring the potential of digital currencies as well as emerging technologies. We did start looking into this area way back in 2020, 2017, focusing on a core mandate, which is how it affects monetary policy. I think since then, the central bank has established its own cross-functional digital currency research hub, and resource it so that we can further explore and experiment on the potential of digital currencies and emerging technologies such as DLT. So, moving on to the next slide, I think I did want to talk about some of the use cases as we think about this. For a highly open economy such as Malaysia, we have external trade, which is 1.6 times of our GDP. One of the key focus or one of the key value propositions that we have seen in our exploration work has been to address frictions in the space of cross-border payments to make it much more efficient. I think we have been working on addressing key pain points on cross-border payments, particularly at the front end, including in our involvement on Project Nexus, which some of you may be aware of, and which is coming closer to live. At the same time, this builds on existing bilateral linkages that we already have with the likes of Indonesia, Thailand, and Singapore. So you can use your Maybank app to just scan in QR codes in these countries just to make your payments. Similarly, tourists can also come to Malaysia to do the same. However, I think we do acknowledge that this ecosystem still relies on the traditional correspondent banking arrangement, and this means that there are still frictions surrounding FX, surrounding time settlement, and the likes of that. And with that in mind, I think wholesale CBDC has the potential to solve some of these issues by enabling atomic settlement using central bank money as a settlement asset, and this enhances liquidity management as well as removing the need for pre-funding. I think consequently, there's also the element of faster settlement times as well. With that in mind, I think this is where the central bank has also been involved in projects like mBridge as well as Rialto. I'll talk a bit more about some of these projects to address other key pain points in the cross-border space. Now, in the space of domestic CBDC, and this is something that I did want to touch upon, the central bank has been focusing on developing a wholesale CBDC prototype based on identified use cases to help see how we can use wholesale CBDC to support new payment solutions in Malaysia and also overcome some of the industry pain points faced today. And this is related to some of the work that we are doing in modernizing our large value payment systems, Rentas. I did want to touch briefly on retail CBDC. Our current assessment in the central bank is that the Malaysian economy remains well served by the efficient domestic retail payment system that we have already in Malaysia. With that in mind, our view is that we don't have any immediate plans to look at retail CBDC, given that the domestic payment system continues to support the economy. Notwithstanding that, I think we do remain open to the possibility of this if developments evolve over time, and the potential for retail CBDC is better understood looking at the various projects that we are seeing across the world. Moving on to the next slide, I did want to talk a bit about tokenization, and this is where more recently the Digital Currency Research Hub has been tasked to study what are the potential use cases for pursuing asset tokenization. And this is about bringing together money and assets on a programmable ledger that could further unlock efficiency gains and benefits for the wider economy. Think, for example, how to use programmability, automation to facilitate 24/7 atomic settlement, improving access and inclusion to credit and financial products. In our mind, tokenization can be one of the foundations for a more efficient financial system. However, to fully unlock the benefits of tokenization, it is essential to build a modular and interoperable system that can bring multiple tokenized assets together on a common platform. And I guess this is where this slide reflects the vision of the BIS, which is the Finternet, which represents a unified ledger that provides a common venue or a shared programmable platform where digital money, digital forms of money, and other financial assets can coexist. I think two defining characteristics of the Finternet. First, it encapsulates all components needed to complete financial transactions, such as assets, ownership records, rules governing their use, and other relevant information in a single platform. Secondly, the exchange of money and assets, such as financial assets, can be done in a seamless manner through automation of processes, where business logics and instructions can be programmed upfront. The structure of the Finternet itself can also be described in terms of building blocks. And for the Bank Negara, we have been involved in a couple of the projects that the BIS is working on in developing these building blocks. For example, in terms of compliance, Project Mandala, where we are working together with the MAS, with RBA in Australia and Korea, is exploring the feasibility of embedding regulatory requirements within a common protocol so that the compliance processes can be automated and be made much more efficient. There's also Project Rialto, where how can we improve the way that trading and settlement of FX can be done to facilitate cross-border payments through the use of potentially wholesale CBDC. There's also Mbridge, which is done out of the Hong Kong BIS Innovation Hub, which experiments on using multi-CBDC. At the foundation of this is the use of tokenized money to denominate transactions and a means to facilitate payment and settlement, which will be a key requirement to realize this vision. And this tokenized money could be in the form of CBDC or potentially tokenized deposits. And these are some of the experiments that are happening. I think moving on to the next slide, I think it is nonetheless important to acknowledge that achieving a fully tokenized ecosystem is something that is will take a long gestation period, if you wanted to be entirely honest. Therefore, we do see the benefit of working towards ensuring interoperability between the existing payment infrastructure as well as a tokenized ecosystem so that they can complement each other. This is where I guess we expect to see some form of, you can call it a quasi-unified ledger ecosystem, where programmable platforms consisting of tokenized private monies and tokenized assets are connected to existing or new off-chain payment infrastructures using APIs. I think some of this has been mentioned in the earlier presentations. I think we also acknowledge that if we wanted to move to a tokenized ecosystem, many issues remain and will require discussions at platforms such as this. So for instance, from a regulatory standpoint, clarifying issues such as what is the status and accounting treatment for tokenized asset will be key to ensure that the financial ecosystem is efficient and there are robust safeguards to protect consumers, for example. Appropriate governance arrangements are also important to be put in place for a fit-for-purpose tokenized financial system. There's also the element of interoperability between the various asset classes as well as the various new and existing systems as well. How the industry also looks at managing liquidity is also key as we move towards real-time settlement, atomic settlement, and this becomes much more complicated environment where this is done cross-border. And these issues and challenges, I guess, therefore brings me to the second key takeaway that I wanted to bring in, which is the vision to build a tokenized financial system would require strong collaboration between the industry and regulators. And this is where there is that opportunity for us to also take cue from our neighbors across the causeway, as well as in Hong Kong. I think we have seen projects such as Project Guardian in Singapore, where there is exploring asset tokenization to enhance efficiency and liquidity of financial markets. Project Ensemble in Hong Kong, where representatives from the industry as well as from the regulators are working on development of tokenization projects as well. And this is where collaboration between the industry and regulators will be key. On that note, I did want to highlight that the central bank is planning to consult the industry much more extensively in the space of tokenization in the coming year as we formulate plans to launch pilots as well as POCs in collaboration with the industry. I think the areas where we will be focusing on initially will be areas which are easier to tokenize, where, for example, processes are relatively streamlined and there is already a clear legal framework and regulations in place. At the same time, studying more challenging areas. I think we are mindful that we may want to look at areas which is within the sphere of Bank Negara, where it's within our control and it's that we are able to influence outcomes, as well as we can also work very closely with counterparts such as the SC, for example. There's also areas that we can leverage on Malaysia's competitive advantage. So the intent is to explore real-world use cases for tokenization that has tangible economic benefits. Some of the identified use cases include tokenized deposits, Islamic finance, liquidity management, as well as supply chain financing. Looking at our existing project on wholesale CBDC, testing tokenized use, testing involving the use of tokenized securities is also something that we are looking at with using CBDC as a settlement asset on chain. I think this is where I think building on what Chi mentioned just now, we do highly encourage the industry to reach out to us and also explore explorative projects in collaboration with Benegara. And we have seen much more engagements over the past couple of months. And so this is something that is very welcome. Maybe the last slide that I had here was as we accelerate our efforts in this space, I think we do remain cognizant of the risk that comes with such innovation. I think one important principle, and this is something that she mentioned just now, is the principle of same activity, same risk, and same regulation. I think from our perspective, it is about ensuring that the regulations and guardrails are there to commensurate with the risks that are being posed while supporting responsible innovation. I think if we look at the key risks that remain at the back of our mind, it continues to be surrounding concerns surrounding cybersecurity risks, as well as the risks associated with execution and use of smart contracts. For example, I think from a central bank mandate, I think concerns surrounding compliance on AML-CFT is key as we want to preserve the integrity of the financial system. At the same time, I think ensuring that monetary and financial stability remains a core mandate for the central bank, and things like how things affect the ringgit will be at the back of our mind as well. I think this is where I think we do acknowledge that there will be cases where we do need to facilitate greater regulatory flexibility. We have the sandbox within the central bank in place to facilitate engagements with the industry and for the players to test solutions in a production environment. I think we are also keeping close tabs on developments globally as well on regulations, and there will be times where we need to make tweaks. At the same time, safeguards will be in place to ensure that stability is preserved, and as well as consumers are very well treated. I guess just to wrap up, the three things that I did want to reiterate comes back to this, the clarity and strength of the use case as well as the value proposition. That is something that is key. Second surrounds, as we experiment, there will be continued to be a need for strong public and private sector collaboration. And thirdly, I think effectively managing the risk that comes together with innovation is also at the back of our minds as well. With that, thank you very much.
Thank you. Thank you so much, Kaiser. And maybe one last round of applause for all 6 of our speakers. It's the end of the presentation part. Thank you so much. All right, so now we'll have a Q&A session, and how it works is using Slido. So you have to scan the QR, and then you can type in your questions onto the app. And when you join in, you do have to put in the little password there, the hashtag SC by SC 2024. Yep. But maybe just to kickstart, because I do know there were some questions that were previously submitted through the survey. I know a lot of the speakers here, specifically, Dr. Stephen and Andrew, they did touch a lot on tokenization. So one of the questions we have here is, what needs to be further developed in Malaysia's digital asset ecosystem to support wider adoption of tokenization? Anyone is free to answer.
Can you repeat the question?
The question is, what needs to be further developed in Malaysia's ecosystem to support wider adoption of tokenization by either traditional financial institutions or from the more fintech space?
I can give one answer, is that it's education and awareness, right? Like, I think creating awareness and education amongst all investors, so whether that's institutional, whether that's the retail general public, I think across all the various, I guess, like touch points to legal, that needs to grow, right? So like I guess like events like today help to create awareness, but with awareness we need to also just increase that knowledge of what tokenization is, what the benefits are to all investors, retail or institutional, and that's the start. I mean, from that we need sort of like the ecosystem to grow with it as well. But like, I guess someone else can perhaps touch on that. But like, education and awareness is the key starting point to this.
Would anyone else like to add?
I think maybe I can add on to that. So I think I totally agree with Andrew. I think the education is going to be the key. And education is not only about the client education, but also is education about the financial community, including ourselves. I think, we have started to explore tokenization at a different part of the world, but essentially that we need to understand the local market and differences between individual market, and that actually will help. I think secondly, I think it's about the regulatory and the legal clarity, and I'm very pleased to see actually the kind of sandbox initiative that in Malaysia, and also actually what has been shared today, is essentially the investor need to be sure that they actually have nobody else have a stronger right against them to have access to the tokens that they have, and also make sure that there is no regulatory restrictions in terms of the issuance, and then whether there will be legislative change that is needed. I think this at the top of the mind of not only the issuers, the financial community, but also at the client as well.
Okay, yeah, thank you. Sorry, Lychee, you want to say something?
Yeah, to provide more, to add on to Dr. Stephen's point. So I think just now I also would like to provide more elaboration what I presented earlier. So first, I think he is very on point on regulatory clarity. In fact, the SC Malaysia is currently developing so-called guidance on tokenization, so that to clearly line out what is our expectations when our players would like to tokenize securities, so that the relevant risk, for example, technology risk, legal risk, as well as the governance risk are being addressed. Also, to add on that, for me to my personal view on how tokenization is needed is we need a solid, strong use case, like Kaiser mentioned many times. Tokenization is not for the sake of tokenization. Tokenization is to solve certain use cases, certain market pain. Then that would be able to better educate and convince players why tokenization is important in the market. And in order to do that, an interoperable market is important, like the Finternet paper. But I also would like to applaud what Bank Negara is doing. While that is for the future, the immediate future would be how to provide that linkages between the conventional and also the tokenized world, so that it's not like you tokenize, but then certain efficiencies met, but then you created additional layers of complexity. So I think those basic infrastructure and also ecosystem is important.
All right, yeah, thank you, Lychee. Thank you for your answers. I think one of the topics that were of quite strong interest when we submitted the survey for all the participants to join in was in institutional participation in digital assets. And one of the questions that were brought up is, what are the factors that tend to drive institutional participation in cryptocurrencies or tokenized securities and whatnot? Maybe Han, you can speak on, because I do know that was quite a bit of your slide.
Okay, sure. Good question. What are the factors that at least we see? First is understanding of the differences between the asset class and then the technology. Right. First, the technology we talked about over the last 3-4 minutes around getting assets tokenized on-chain. That's completely different to natively on-chain assets, which are not, a security token, right? So classic cryptocurrencies, Bitcoin, Ethereum, etc. A big institutional driver right now, in the last 12 months at least, has been the understanding of crypto assets as a huge diversifier within portfolios, right? There is tremendous research out in the market now around model portfolios being enhanced with crypto assets, right? And as an institution, whether you are managing assets on behalf of an investor or you're managing your own treasury, ultimately your KPI is to deliver returns for your investors. And if there is an asset out there which you can access in a highly compliant manner to get that extra return for your investors, then you'd be silly not to consider it, right? provided you have a very confident way to access it in the same way that you would equities or bonds. So that's the biggest driver right now that we're seeing, which is growing understanding that exposure in a small way, not more than 15% according to Chi, really enhances portfolios in a way that we've never seen before, right? More so than gold, more so than real estate, more so than infrastructure, more so than private equity, more so than private credit, more so than venture capital, right? This has been a tremendous asset class over the last 15 years. And now institutions can access it confidently without having to worry about the counterparty stuff and focus more on the market risk stuff, which institutions are generally expert in. So yeah, so that's the answer. Like what's the big driver? It's that.
All right. Yeah, thank you so much. Would anyone else like to add on? If not, so another very hot topic that was not only from the Slido but also in the survey that we sent across was in stablecoin. So I guess I wanted to ask you a general question for all speakers. What do you think is the role of stablecoins, not just within digital asset space, but also in traditional finance?
Yes, and maybe I can take a step on that. I think the stablecoin market is quite interesting. They grow very fast, and actually you see dominant players that are more than 100 billion capital in the market capitalization. And as I said, one of the key observations is it feels quite interesting to see actually how they can scale that quickly with less than hundreds full-time staff and within a short period of time. And this is such a contrast to how the traditional finance is managing as a payment instrument. But we need to recognize that actually the stablecoin itself is very new, and then the way that it's being looked at actually it need to be focused a lot on the underlying reserve management, the transparency in terms of the underlying reserve asset, and ensure actually also have the use of the stablecoin goes beyond the cryptocurrency ecosystem. I think that is opportunity that can continue to grow in a sustainable way. So you have not only a sustainable profitability but also have a sustainable growth for this segment. And that, I think, one of the key use cases for stablecoin we can see is in the global trade, where in the emerging markets and on the cross-border basis, where this easy accessibility of the stablecoin could potentially change the way that make the payment much faster, cheaper, and much more streamlined. But that being said, I think still cross-border jurisdiction differences in terms of the regulatory treatment, as well as the AML and the related concern must be addressed in the most completed manner. I think another issue, interesting about stablecoin is also about actually the potential new innovation, right? So we have seen most of the stablecoin regulations have been focused on the fiat currency-backed stablecoin, but also with the short-term securities. In Hong Kong last year, Standard Chartered, we have participated in the project called Project Dynamo with the BIS and Hong Kong MA. We actually explore the bank-issued stablecoin, but it's backed by bank guarantees. So actually, in that case, when this stablecoin is being used in cross-border trade, actually the buyer, they do not have to do advance payments or debit their bank account upfront, which may have liquidity and implication to their business. But at the same time, we have learned that but such stablecoins is hard to fit into the existing regulatory framework in Hong Kong, in Singapore, and some of the key markets. So I think the kind of like new innovation of the stablecoin may still continue. And then I think what will be needed is actually to have a very close public-private partnership to ensure that actually the regulation and the innovation go hands in hand, and to make sure that the innovation actually can be supported with a regulatory framework.
If I can add to that one, I think just sort of a historical side note. I think when stablecoins first came around on the scene, I don't know, maybe 2018, 2017, I think there was like people were like worried, oh, okay, like is stablecoin gonna disrupt the current system and so on. But actually what we saw through trading volumes is like a lot of crypto exchange trading volume instead of, for example, say people converting between Bitcoin and Ethereum, or Ethereum and Solana, or so on, actually a lot of that trading volume actually moved towards stablecoin and crypto. So actually, in a weird sort of ironic way, stablecoins actually, crypto actually contributed towards people showing demand for fiat currencies as well. It's not like, oh, the existence of Bitcoin, Ethereum, then no one wanted to use like ringgit or dollars anymore. So, I mean, to predict in the future what would happen with stable coins, I think Dr. Steven have mentioned so many good points. But what I want to say is that we might not even know what the innovation would bring, but I'm very certain that stablecoin is going to be a huge part of it.
All right. Yeah. Thank you, Dr. Steven and Aaron. I think there's one question here that's aimed towards the regulators, actually, and I think it's a good one. If the regulators had a choice, which aspect of the market in Malaysia is most ripe for fractionalization and transparency that tokenization offers?
Maybe I'll start first. Because I am lucky, my chairman gave a very good speech this morning. He talked about bond tokenization. I think interestingly, it has been a conversation within SC that our bond market, while it's huge in volume, is very institutional. So we would like to democratize access for smaller pieces, including like retail access to bonds, so that they could freely choose the asset class that they want to invest and also plan for their own, that they do not need to invest in other asset class that invest in that bond. So then they can help them to have more freedom to form their own portfolio. And then tokenization, other than being able to fractionalize, can also provide certain governance structure into that. For example, asset servicing and so on, and allow the issuers to interact with the investors. From there, we can also provide certain transparencies, as well as more transparencies in terms of like governance between the issuers and also the investors. So that's one. And also we also hear a lot of conversations about private assets. So I think those are also conventionally very institutional focused. I don't say that one is need to brought to investors, retail investors, but for me, personally would be the asset class should follow the underlying assets classification, but tokenization offers different ways to distribute those assets, including improving the tradability, liquidity, and then when internet really happen, then this different asset class can intertwine, provide utilities such as collateral, so that provide more incentives for people to hold those asset class and being able to utilize them well for their different positions.
Maybe I'll just build on that. I think definitely from the perspective of securities, that definitely is an area where we feel that there is that potential for fractionalization. I think beyond that, if you look at the exploration that we are keen to pursue, but I guess this is more on the liability side, would be on the deposits, to the extent that we can use tokenized deposits as a form of safe settlement assets to facilitate domestic payments, cross-border payments. That would be an area at which, in our view, is an area that I think we are also keen to see greater work on and greater collaboration with the industry. Thanks.
And also to add to that, maybe regulators may not be the person who will be able to pinpoint all this the best. We believe that people working in industry know your problem and opportunity the best. And again, to amplify what we said earlier, if any interesting idea, feel free to come to us.
Yeah, with that, maybe I'll open up the question to the industry players as well. Is there any area within the Malaysian market or just, globally, which would benefit most from the benefits tokenization could bring in?
I'll take a step at it because this is exactly where we sit, the middle of where we sit, which is naturally we are based in Malaysia. We operate ringgit funds. We obviously are allowed to have non-ringgit funds, as many fund managers do. But for us, like we see tokenization as a way to access a global market. Like what size is the market? About $2.5 trillion in crypto assets globally. Which if you had access to key local assets on chain, be it MGS or GII in one basket, or it could be corporate bonds in another basket, or it could be a basket of Malaysian equities or individual Malaysian equities, it's fine. Or the ringgit itself and deposits, as you mentioned, right? And if they were on chain, then the next step is how do we make sure we offer that to that $2.5 trillion market, which is a very highly traded market. What I mean by that, it's not just $2.5 a trillion US dollars worth of capital. It's actually a high velocity trading capital. It's not just capital sitting in Miami real estate or whatever. It's actually why is that? It's because the last 10 years of digital assets has been around trading, facilitated by exchanges. So there's a lot of capital movement in that space, which Malaysia can capture if we're faster market, right? What I mean by faster market is have an easy way for somebody sitting in Florida or New York or London to go like, I'm a family office, I need some Malaysian exposure. I love the ringgit the last 2 months. How do I get that fast? Do I have to call a private bank in Singapore? No, I can access it on chain on a very popular protocol. Maybe I can do that, right? And for me, that's the big opportunity, which maybe we have to work with a regulator to see we can unlock. It's essentially crypto FDI. If you think of crypto or digital assets as a big foreign country coming into Malaysia, and just make sure we have the usual protections around, making sure we don't get attacked speculatively and stuff like that. But beyond those things, there's a huge opportunity there that we're all currently we're kind of peripherally aware of, but we're not actually shooting an arrow towards that. I think we need to start thinking about shooting an arrow towards that and bringing even more excitement to the Malaysian capital market that way, because there's a pool of capital there which is high velocity, which can come to Malaysia. So that's kind of my point.
Yeah, if I can add to that, I think just something trends that we're seeing, I think both for retail and institutional, I think there's a move towards looking for yield in, historically digital assets is capital gains, right? I buy Bitcoin at 1,000, I hope it goes to 10,000. But I think as the industry matures, now we're looking for yield. Can I earn some yield on my Solana, Ethereum, or so on? So if tokenization can actually help investors get yield in, say, bonds or any other traditional capital market product, then I think that's where the industry is headed as well.
All right. Yeah. Thank you so much. So it's 3:30 now. So that brings us to the end of our session. But maybe I'll close off with just one last question just for everyone to answer. So generally speaking, what do you think is the impact of tokenization across the value chain in the different areas of asset classes? How does it impact the players and the processes within the value chain? I'm open for anyone to answer.
I can go first because we feel the pressure internally as a fintech company, come fund manager. We feel that pressure internally where we feel like we have to operate at the pace, at the velocity, at the flexibility of the tokenized market, right? Yet we have to comply with, as in I think fairly so, comply with the usual regulations that we as a fund manager face, and I think that's a big one, right? Which is how do we make sure that we use tokenization as a way as impetus to make ourselves better? For example, for us, like our bond fund we can actually do T+0 redemptions. How do we do that? How do we do T-day redemptions? Because we have that velocity in mind, right? We go like, okay, well, a token person expects it today, now. So even if we do it end of day, that's pretty slow. But in a traditional capital world, that's not usual, right? It's usually T+1 or 2. So that's what I mean by that's an opportunity which tokenization can bring. It brings you into that mindset of efficiency of that market.
If I can add on to that, I think there's one thing that is for sure is the financial services will be digital and will be interactive and it will be streamlined. And for the past decades, we have been working on different initiatives to deliver that financial services to the customer. But I think tokenization is a very interesting opportunity for us to look at that as a financial industry, to bring that level of a digitalization and interaction to the clients that we serve in a global ledger, and that can actually make the financial services much more affordable and much more accessible to all. So I think this requires the community effort and not only siloed effort individually. I think we need to collaborate, not only between financial institutions, but also fintech players, and a close collaboration with our regulator counterparts, and ensure that responsible innovation is happening. There's sufficient guardrails, and then that can deliver actually the right outcome for the community and the general public good.
I would just echo that. I think the element of efficiency gains, I think that's key. I think potential costs, benefits for the benefit of businesses, for the benefits of consumers. And I guess just coming back to my earlier point, I think it is about real world use cases that is key. And it is about responsible innovation while effectively managing the underlying risk. And that's something we're definitely keen to look at more and more. Thanks.
All right, I think that brings us to the end of this closed door session. Thank you to all the speakers for your insights and for your presentation. And thank you for all the participants as well for joining us.